Welcome back to the channel, everyone. And today we'll be taking a break from the Internet Historian, and we're going to be taking a look at Upper Echelon. I've seen Echelon's videos before, but I was primarily watching their videos when they were a gaming channel. So when I was playing a lot of the Division, I was watching their channel because they had a lot of Division tips. But at some point they pivoted over into not quite a drama channel, but more of like one of those information channels, kind of like Internet Historian. But I guess they put a bit more into their editing, at least their newer stuff anyway. This is their newest one, the Venture Capital Cycle of Insanity. Go check out their channel, watch it there, all the normal stuff. There will be links to the original down in the description. But yeah, I want to see how they've changed over the years because I haven't seen them since I started watching their Division stuff. And I was looking through their videos, and they haven't been doing like main video game stuff for years. So we're gonna check out some of their stuff. And then there's also another one that we're checking out, Magnates Media, I believe. And then we might take a look at the newest updates for like the Illuminati stuff. So anyway, I'm gonna try and branch out a little bit more. Because I keep getting requests for now new channels, which is great. I can now see what you guys kind of like to watch and that kind of stuff versus just, randomly haphazardly picking stuff. But yeah, let's get into it. This is the cycle of insanity for venture capitalism. So this ought to be interesting. I like the intro.
This video is brought to you by Ground News. Stick around to hear more about the special offer they are providing to the entire Upper Echelon community. All right, it's not really the definition of insanity, and Albert Einstein wasn't even the one who actually said it, but how many people watching this have heard the phrase, the definition of insanity is doing the same?
I do like the fact that so many quotes are attributed to so many random people. Like, there's at least 100 quotes attributed to Winston Churchill, and probably at least 100 attributed to Albert Einstein that aren't actually them. And people are like, oh yeah, that's real. People believe a lot of everything, won't they?
Same thing over and over, expecting a different result. Yes, anyone? Assuming that you have heard that phrase, even if you haven't, today's video is a perfect demonstration of the concept because today we're looking at the cycle of insanity when it comes.
I think that's actually a good quote for a lot of YouTubers. If you stick doing the exact same thing over and over and over again, your channel's just gonna run into a wall. I was specifically only reacting to like nerdcore at the beginning, which is fine. But I ran into a wall because I'm not the best when it comes to reacting to music, which a lot of people have pointed out. They're like, you're missing all these specific things about bars and how the lyrics are flow together, but you're noticing some of the visuals. But we all notice that. So I switched over to other things I can actually have conversations with.
Comes to venture capital using three separate examples: crypto, video games, and artificial intelligence.
Oh,
now, of course, some people will be wondering, and rightly so, what is the cycle? And the short answer to that is throwing billions of dollars into a heap and metaphorically setting it on fire because you're greedy. But the long answer is quite a bit more nuanced and requires in-depth examples, so let's get started. First up is crypto, and this is the part where we demonstrate the cycle as clearly as we possibly can. This
crypto is a weird kind of thing, isn't it? Backed on technically virtually nothing. Well, a lot of things are backed on nothing. You can say it's backed on the blockchain, but that's so hard to convince regular people to understand, let alone follow. Most people they're like, I don't care if it's backed on anything. It looks like I can make money with it, then that's all that really matters. But, explaining how it works to the average person just doesn't work. It's easier to just be like, you know what, just gamble with $500 with it. It's like going to a slot machine for you. Oh man, yeah, crypto's complicated. It's kind of like the concept of selling video game items. Those are technically backed by nothing, but people want them, so you can sell them. Same goes for video game gold. Definitely items in games, though. Accounts.
This right here is a list of all venture capital deals occurring in the entire crypto industry from 2014 to 2024. Alameda Research, the bankrupt hedge fund of FTX founder Sam
that was a fun one.
appears over 100 separate times on this list as an investor. 15 of which come back as lead investor.
Okay, so this list isn't necessarily um, thousands and thousands of different venture capitalists. Some of them are duplicated because it's the same company, but they're doing other things within this. Okay.
Dumping money into crypto projects all over the world. Well, if we visualize these numbers, the picture of what's actually happening becomes rather clear. Nobody cared at all up until 2017, at which point everyone cared from a venture
Yep.
capital perspective, throwing as much money at the wall as they possibly.
That's when we had the first jump to 65,000, right? When it literally went from like 5,000 to 65,000 in a year, and then died off. And then pandemic, so everyone was freaking out around here because they didn't know what they were doing. A lot of people were being laid off. A lot of people were stuck at home. No one knew exactly what was going on, so no one was spending money in places. And then here, jeez.
We could, hoping it would stick. And then when the hype died down, nobody cared again. It's not about the technology, and it's not about the practical value or utility for these people.
I don't know if it's the hype died down here. I think a lot of the worldwide issue had to do with this. I bet you it would have been a bit higher, like more stable, if no one was holding on to their money for that first 2019, 2020. I think a lot of people were really wary of what was going to happen because a lot of things were getting shut down that probably shouldn't have been. And I think that's probably the biggest issue here. If it wasn't a global problem, I would say that this was would be a non-issue, and it'd probably be like this bar right here, just all the way across, much lower. But you know, it was obviously dying down right here, but it started to pick back up, and then right about here is where the pandemic happened. So I think that this had a much bigger effect on a lot of worldwide stuff all over the place, and you can't just attribute this all to lack of interest. um, and then this is when people started getting more stable again with their money. Some of it was free money, but you know,
If it were, there would be significant investing during off periods as well, probably more so, and not just desperately latching onto a retail speculation wave. But later down the line, in 2021 and early during 2022, the hype cycle came back, the prices went up, the speculation bubble revamped it.
a lot of people right around here were working multiple jobs from home and kind of like gaming the system. So a lot of people had a lot of extra money. A lot more people were also saving money per month, not driving in, commuting to work, not eating out every single day while at work. So they were like, "Oh, what do I do with this extra money?" And they were throwing it into crypto and just wasting it in general. But they were just throwing it into random higher risk investments versus low risk dividend stocks. So that's part of it.
Itself, and suddenly, here we go again as the venture capital comes flooding back into the industry. It's not a coincidence that these two hype cycles of this is the future, we have to throw as much money as we possibly can at the entire industry, happened precisely during the two all-time high price movements of Bitcoin. It's a rudimentary example, to be sure, but the cycle here is plain as day. Something is perceived to be popular, aka throw as much money as you possibly can at it. But that kind of mentality doesn't typically
Well, that's FOMO. That's just fear of missing out. That happens with every investment. That's the same thing of throwing money at Amazon or Apple or anything like that.
work out very well. Remember, Alameda Research was leading a lot of these funding rounds and participating in over 100 of them.
Yeah, but they
Alameda
were doing
Research was just a
crazy
money
risky
funnel
stuff.
attached to FTX, and FTX was a multi-billion-dollar fraud run by Sam Bankman-Fried. It gets better though, because FTX itself also received large amounts of venture capital through investments.
FTX probably could have survived if Alameda actually ran their investment strategy correctly. Did what they do a lot of stuff bad? Absolutely, a lot of their stuff was awful. But there was like no regulation. There still is limited regulation in the crypto field. You can lose so much money. You can gain a lot, but you can lose a lot so
Sparking
quickly.
questions from the SEC directly about how the hell it would be possible that no one conducted proper due diligence before throwing billions of dollars into a wood chipper. Three Arrows Capital, another crypto hedge fund
Oh
that
yeah, I
went
remember
bankrupt
this one.
specifically as a result of this cycle, participated in 31 of these funding
Yep.
rounds, often directly alongside Alameda Research. But for Bankman-Fried, at least he actually got a 25-year prison sentence, which segues perfectly in today's video sponsor, Ground News. I vetted Ground News personally for over 6 months before I actually agreed to work with them, and I use the service for one reason in particular, and that's comparison.
I actually like Ground News. When I was in college, I was doing a lot of research papers, and Ground News was just coming out, and it's one of the few sites that makes it easier to do research if you are doing like political stuff, because you can read the same story twice from two different angles or more, and then see how bad it is on left or right. And you can see how it's very interesting how people will spin, how news sites will spin the exact same story from the same people, and you're like, I swear I'm reading like from two different countries. What's going on here? So yeah, ground news is pretty good. Um, we're gonna have to skip a little bit ahead though because there's a YouTube policy that's kind of annoying,
It is they
and I
read
can't
and
just
not have
like
someone tell you.
post the
Ground
entire
News helps cut
internal
through
ad.
biased reporting, especially. They don't tell you what to think, as I just said, and they provide the necessary tools to help you navigate information better in a modern digital environment. Which in the description to sign up, you'll get 40% off the Vantage plan.
But yeah, go
Again,
and
link
sign
down
up
below
using
in
their
the
name.
description, ground.news/echelon for 40% off a Vantage plan today. Big thank you to Ground News for sponsoring the channel and for being a research tool that's used in the making of this video. All right, we talked about crypto, but what's next? Next is esports, and having showcased the outline of what
I kind of wish this would have been a whole video on crypto, but I guess it makes sense to split it up. Oh man, I could talk about that all day. I think it was interesting. Yep, that's definitely a big thing, but I think this would have needed a whole video to really go into. But yeah, esports. Let's take a look at this crazy
what
thing.
is happening, generally speaking. This time I want to dig deeper on a specific example, that example being FaZe Clan, and look at how it's actually happening. High level first, esports is once again a perfect showcase of the pattern we just described. Excitement leads to hype, leads to venture capital paying attention, leads to oopsie, sorry, we lost.
That's true. They put so much money into some of the esports games and teams that was fine. But the problem is, while a lot of people wanted to watch it, they wanted to watch it for free with no ads. And a lot of people use like ad block and stuff like that. So that's where you're gonna lose the money. You can't if you can't force people to watch commercials and things, and they're just gonna circumvent it or wait for someone to watch it with ads, then clip it out, then put it up on the internet for free. That's what they're gonna do. It's definitely different than throwing money into like the Super Bowl, where everyone for the most part will watch it on a TV or something similar and not bother. They actually want to see the ads. So like a lot of Super Bowl stuff, people love watching the ads because they're entertaining and they're specific for that. So maybe if they would have done that, if they would have created like commercials specifically for esports and then launched them on those days and then, made them fun, people probably would have watched it and probably would have sunk their money into this even further.
Lost everybody's money, never mind, let's move on to something else and throw money at that. But aside from the actual criminal fraud cases like FTX,
Oh yeah.
it'd be very hard pressed to find a better example than FaZe Clan when it comes to just setting money on fire. See, FaZe Clan was basically the esports darling child. They raised over $40 million in multiple funding rounds, eventually going public via SPAC merger with an expected valuation of over $1 billion.
Kind of reminds me of there was a movie company. They were on like WeFunder. I don't know if they're still around, but there was like a small little media company that decided that wanted to compete with Hollywood, and they do have a bunch of like little cameo spots in a lot of movies, but they're kind of just like going nowhere. Like their stocks are like $10 a share. The fact that they actually made it though to the stock market, I don't even know if they're so. That's the thing. I don't know if their shares are on the market yet, so maybe they're still locked behind the pre-sale wall. But they have like 40 pre-sales, which is the problem. So I don't know if they're like some weird Ponzi scheme or not.
And when the ticker finally went live after the IPO, the company was valued at $725 million. But that's about as far as they got before it all came crashing down. In less than 1 year, they had lost over 97% of their stock value, eventually receiving a notice that they would be delisted from the NASDAQ if they didn't get...
Yeah, you get delisted from NASDAQ if you're underneath $1 for around 180 days, I believe. That's the same thing that happened with that car, the car company, Fisker. Fisker got wrecked, and it wasn't because of reviews online. They got wrecked for other reasons. They
Get the
just
share price
their
above
company
a
or their
dollar for
car
10
just isn't very
consecutive
good.
days. Spoiler alert, they couldn't do that. And shortly before the company would have been removed from the index anyway, a company called GameSquare acquired them, full
Oh,
scale,
I'm
delisting the ticker
surprised.
completely, for the paltry sum of $15.75
Okay,
million.
that makes
The
more sense.
company that
That's
had
why.
raised $40 million from venture capital and IPO'd with a market cap of $725 million over the span of less than 2 years.
Uh, that's a little bit of a misnomer, though. I mean, yeah, okay. Let's say you raise $40 million. Depending on how big your team is, that's not a lot of money. You got to pay, your esports guys, and you got to be paying them, probably 1 to 3 million each, depending. So that's going to be a good chunk of your money automatically. Then you have your staff, and then evaluation is based off of your share price, but you're not going to own 100% of your shares. So I mean, so the IPO. So let's say this is the value that they were valued at. That's not necessarily what they have cash hand, and then it's going to only go up only if they can sell, more shares. But obviously, once your shares hit at 18 cents, so yeah, there's a lot of stuff that's going on here.
Had devalued itself to a share price of 18 pennies and been bought out completely for less than half of what they raised in venture capital alone. Now, you might be wondering, how is it even possible to fail that badly? And setting aside things like the $30 million party mansion that they have or the
Yeah,
PPP loan.
that will definitely do it. It's when you have mismanagement within the company, a $30 million mansion. The question is, now here's the thing, that $30 million mansion is still worth $30 million, right? So they could sell it, right? So it's not like they didn't just burn it. It is still a valuable asset if they can sell it. If they can't sell it, then it's less valuable, but it's still probably worth 25 million.
Loans that they took during COVID that were supposed to be meant for small businesses. It's pretty straightforward to see that the company had no future
Well,
and
if it's a PPP loan, lots of people took those, and they probably shouldn't have.
did not deserve to be the subject of venture capital delusion if you dig a little bit deeper. One of their members, named FaZe Rain, after a heated exchange on social media, but the details of that aren't really important, decided to reveal esports revenue stats for basically the whole company, which one might think would be part of the discussion when major investors come on board. And the numbers he disclosed are staggering in a bad way. I won't go over all of them right now, but from just 9 of their esports teams collectively, FaZe was losing $750,000 per month. That's not even close to their total losses.
That's not really a huge loss when it comes to a startup company that has $50 million ish in startup capital. A lot of companies have lost money for years before they started making money. But the problem is they have to have the capital to make it past those losing years. Amazon lost money for years uh, before they made anything. But the biggest problem is this is a niche target. So when you have a niche target, you have to really be on top of everything. You can't really be losing $700,000 a month when you aren't, when you're not doing like major, in front of like tons of people deals. Esports is big, but it's not that big.
By the way, that's just from these particular esports teams. But when you have a pro team of Valorant gamers that are dragging your company red by over 200 grand per month, yeah, at a certain point, the idea of venture capital funding is indistinguishable from the process of pouring gasoline.
That's probably just paying your guys a little bit too much. My guess is they had a Valorant team that refused to work for less than a certain amount of money. I don't know how many players are on Valorant. So, like, how much is on a team? Is it 10 players? Is it 4? Because, you probably shouldn't be paying your players $50,000 a month. Unless this is actually dragging in a ton of money. Like, for instance, I would say the FIFA Online is probably a more accurate one. Super Smash makes sense. Apex makes sense. Oh, they had no. Valorant wasn't. So they had Valorant Women and Valorant. So Valorant was pulling out over $300,000 a month in losses. FIFA, that's a good one actually. Not sure. R1's probably a racing one. Fortnite, I could see a $48,000 loss in temporarily, But if anything that should have been in the green, it should have been probably Fortnite at the time.
All over a pile of your money and setting it on fire. However, none of it compares to what comes next, not even close, because the cycle of hype leads to FOMO, leads to venture capital jumping in, leading to massive losses, is getting ready to happen yet again, bigger than ever before, with artificial intelligence.
That's what's gonna be interesting because AI is probably here to stay, and yeah, there's gonna be a ton of people that will lose a lot of money on AI companies, but that doesn't mean it's not the same as a game an esports team. It's not the same as okay, you could say it's closer to crypto, but it's definitely not the same as an esports team when it comes to venture capitalism because AI is going to have wide-reaching effects across every industry for the future, regardless of if you like it or not. It doesn't matter if a ton of companies fail due to it; it's not going to slow it down. It's already
Crypto
probably
showed
too
us
late.
what happens, plain as day, just visualized on a graph easily. Esports showed us how it happens, to a degree, with a particular example. So let's use that and look forward at what the future might hold. First thing right off the bat here is that AI historically already sits very high on the list of venture capital targets, and it's been growing in that way
Well,
for
yeah,
many years. According to reports from the Organization for Economic
of course. If you can cut out half your workforce and put it in with AI, it's going to be done. Workforces are notoriously a money sink because everything from annoying idiots that work for you to lawsuits to to just dealing with people in general. If an AI model can replace them, use them.
Cooperation and Development, OECD, venture capital targeting AI has grown from 3 billion in 2012 to
Yeah,
75
just take a
billion
look at
annually
Nvidia.
in 2020. For the
Nvidia's
sake of
price
comparison,
shot
just to
through the
put these things in
roof.
perspective, crypto, the entire crypto industry that is, in the past 10 years total, has only processed roughly $100 billion of venture capital deals, which demonstrates the scope of what we're talking about for AI when we understand that 2020 wasn't even the relative peak for this.
Crypto though is a niche area. It's um, you can use it as a move of value effectively. That's really all that people are using it for. If wire transfers were near free like they are when you move like altcoins like Doge and Ripple, then people would still use wire transfers mostly. But a lot of wire transfers are hundreds and hundreds of dollars to move any money. I'm not talking about crypto move. I'm sorry, I'm not talking about Bitcoin moves or Ethereum. Those are notoriously too high already. But altcoins move. You can move millions of dollars for a fraction of a dollar. But AI is not. It has an actual value to the world, as in it can dramatically increase living conditions for everyone on the planet. I mean, ignoring the potential to wipe out humans in another regard with like an ARG, but yeah, I mean, why wouldn't they put money into something that's going to effectively cut out massive chunks of their workforce? That's an obvious fact, and it's not like it's not going to happen. It's already happening. The chatbots are actually getting good. They were horrible before, and every time I got on the phone before, it was like, I just need a representative. Just send me to a representative. I don't care. That was like 4 years ago. Now I can actually complete a refund for something that's broken, through Amazon, whatever, and it's a complete AI system, and it makes sense and works.
This industry. Interestingly enough, 2023 wasn't the peak either, despite
It's not going to be the
growing public
peak.
awareness, because in 2023, the annual venture capital deals fell to around 50 billion, where 10 billion of that total was given exclusively to OpenAI.
Yep.
But therein lies the problem. See, the relative proportion of all venture capital being invested directly into artificial intelligence is actually rising. According to Crunchbase data, over 20% of the entire venture capital market was being devoted to AI-related startups in February of 2024, which is significantly higher now, by the way, than it ever was previously. Meanwhile, OpenAI is losing a ridiculous amount of money. $500 million per year was being spent during the development stage of ChatGPT by itself, and now some reports allege upwards of 700.
That doesn't really matter though. Even if OpenAI is losing that much money, companies are going to flood money into it because of how useful that tech is. This is not tech that is like a passing fad. This tech is incredibly useful, especially if you've seen OpenAI's new Sora. That's go that's going to be make a major problem for the entire world, because then you can fake effectively any scene you can even dream up. Which I don't even know if they could legally release that. They might be able to release it to like Hollywood, but it's not even. And OpenAI is just the first company that can do this. There's going to be another company that's going to be able to do this relatively quickly. They're just the most advanced for the moment, but it doesn't matter what they lose at this point. They're basically a company that can't fail, because so many people are going to be putting so much money into it, because ChatGPT, for the most part, is probably the most advanced algorithm, at least for commercial use for the moment. Military is going to be its own thing.
$100,000 per day being lost in order to run the service, while total user base is actually falling and the company struggles to monetize. But none of that really matters, actually, because if you can capture the venture capital hype cycle, and that's precisely what Sam Altman is trying to do, Sam Altman being one of the original funders of OpenAI, as well as the unshakable CEO of the company, who was briefly ousted by what seemed to be a failed coup by the board of
Oh yeah, that was pretty funny.
before coming back with a vengeance. If you can capture the hype cycle, well, all bets are off. The entire world is your oyster. This is where it gets crazy, at least in my opinion, and where the whole pay no attention to the man behind the curtain concept becomes completely absurd. Here's Sam Altman speaking 4 years ago at an event called Strictly VC.
The honest answer is we have no idea. We have never made any revenue. We have no current plans to make revenue. We have no idea how we may one day generate revenue. We have made a soft promise to investors that once we've built this sort of generally intelligent system, basically we will ask it to figure out a way to generate an investment return for you.
But I mean, technically, that does work. There was a guy who made I think he turned a website into like 16 grand from a couple of GPT prompts. But that only happens a few times based off of example. Remember the guy who created a GoFundMe for potato salad and made like $500,000. That only happens once. All right. The problem here is it doesn't matter how much money you want a company wants to put into AI or whatever. They're going to put it into AI because of one reason. It's going to help delete their workforce. If you can delete your workforce and put it into an automated system, they're gonna do it. That's the whole reason car companies and manufacturers are switching to robotics, which by the way use AI. So you can get rid of your liability issues with human workforces. If you can make it fully automated, you can run the entire factory with like 5 people, which you can pay them a little bit of a premium, and that's all that will matter. Doesn't matter if this company loses money. They are pushing
really
AI
does.
forward.
I get it. You can laugh. It's all right. But it is what I actually believe is going to happen. Like, there's that joke that I actually think is very funny, which is like, step 1 is do this thing, step 2 is do this thing, question mark, question mark, question mark, profit. But like, I think if AGI is on the table, that's actually okay.
That is just frankly insane to me. Invent something and then ask it how to turn a profit, which somehow justifies companies awarding tens of billions of dollars to that pursuit, because question mark. But with that in mind, turn your attention to this. Sam Altman seeks trillions of dollars with a T, trillions with a T, to reshape the business of chips and AI. OpenAI chief pursues investors, including the UAE, United Arab Emirates, for a project possibly requiring up to
I mean, that makes sense. UAE would be a perfect place to check it. They have to put their money somewhere.
$7 trillion, end quote. $7 trillion. That is unbelievable. But for anyone who doesn't quite comprehend the scale of that number, and you'd be forgiven for not really comprehending that, let me put it this way. The entire GDP, gross domestic product, of the human race on planet Earth right now is roughly $100 trillion. Sam Altman is seeking what amounts to roughly 7% of that total as funding for his new AI venture.
Yeah, but that actually makes sense to a degree. AI specifically could upend the entire world. Uh, why not seek that much? You could seek more. And most companies will throw their money at it if they can get rid of their workforce. That's it. That's all there is to it. If you can get rid of your entire workforce and put it into an AI algorithm, they will throw 90% of their income at it
demonstrating the largest iteration of the venture
to get rid of their
capital
horrible
insanity cycle
employees.
that we've ever seen before. I'll go one step further here. GDP is a commonly referenced data point on economic strength a lot of the time, but it may be kind of hard to put the comparison in perspective with that number. Try this one on for size. Credit Suisse estimates a global wealth total of 454 trillion in 2022 at least. That means the added value of all products, currency, assets, and accumulated wealth on a household level across the entire planet, which therefore means that Sam Altman is requesting the equivalent of over 1.5% of the entire human race's personal accumulated capital for his next VC initiative.
Yeah, and that's a small price to pay for a lot of companies. That's the thing with AI. It is such an all-encompassing thing and will be for the next 15 years to the next probably 150 years until, an AI probably takes over the planet. It doesn't matter. It's all about eventual lowered costs, not it's like the same concept of coax cable versus fiber, it wasn't important until data rates passed requirements for 10 gigs per second, which was your upper limit of coax. Whereas, fiber, the companies that are really succeeding now are the companies that are throwing fiber at everything. And the upper limit we have, which is, by the way, like 70% the speed of light, the upper limit we have is only limited by our current hardware, not the actual infrastructure of the cable itself, which they should have been, upgrading years ago, and they just didn't. And now a lot of companies are starting to pay for it.
That is like bonkers level insane, cuckoo bananas, down the rabbit hole Alice in Wonderland. What the fuck is happening? The venture capital cycle of insanity, under the not technically precise definition that wasn't even really ever stated by Albert Einstein, is the cycle of investors giving money over and over and over again to projects that will never and could never pay them back, expecting different results each time.
Okay, I totally get where he's coming from crypto, okay? I totally get where he's coming from esports. But it doesn't matter if there's a monetary gain for AI. That's not what people who are investing in these projects care about.
Because this one's going to be different.
Some do, but the majority don't.
We saw it with crypto multiple times, more than multiple. It's the entire crypto industry. We saw it with esports very clearly showcased. And
esports is a really good example of this.
Ever looked at the FaZe financials and said, yeah, let me throw money at this group of kids. And we're seeing the largest iteration of it yet by far playing out in real time, once again, as the industry fails to self-regulate or temper their expectations in the slightest, rushing forward to throw money at things that have almost
no industry ever self-regulates correctly. That's just not going to happen. That will never happen.
Reasonable chance of ever returning that value. They do the same thing over and over, expecting a different result, aka the not so Albert Einstein definition of insanity. I don't know what will come of it this time in particular, but as the cycle gets bigger, so do the consequences, and this is the biggest version of the cycle. I'm
going to say I'm going to disagree with AI just on the concept, because throwing money at it doesn't matter. It's all based off of what is the eventual results of adding AI to companies, and can we get rid of staff? That's it. If that succeeds, then they will throw all their money at it. That's it. That's all. That's the primary goal of AI, and that's what they want to achieve. Which, I mean, sure, fine. That's what a company wants. Yeah. Great. Will it throw our entire economy into chaos? Probably, but that doesn't matter for profits.
We've ever seen. Anyway, that's it. If you want to support the channel, there are links down below. The video sponsor, Ground News, of course, a VPN affiliate, Locals, and Patreon for monthly support.
The thing that a lot of companies are going to miss out on is the fact that once you have AI taking care of your entire workforce, where is the additional money from the consumer going to come from if no one has jobs? You're going to need to train people to obviously run the AI stuff, but there probably won't be enough jobs in that regard. So a lot of people will have to start switching back to things like farming and things like that. So that'll be interesting. But they're also adding AI to farming. So They have like fruit picking robots that can work 24/7 and are better at picking fruit than the human. So it's going to be interesting over the next 25 years. But I don't know if Magnates Media, or not Magnates, this is Upper Echelon. Sorry, my bad. I don't know if Upper Echelon has the AI part correct. They definitely have crypto probably fairly accurate, and then they definitely have esports narrowed down. AI, though, it's not about the money in this case.
Subscriptions, that's probably the best way. Click that if you want to support and more, but I'll cut it there and stop rambling. As always, thank you all for watching, and have a nice night.
Is this how Upper Echelon just ends their videos with the random nature scenes? Oh, I want to take a look at the Collapse of Hex. That'll be interesting. I've seen that company. Well, company is kind of a wrong word. So yeah, we're gonna take a look at more Upper Echelon stuff. Because these are very interesting discussions. I'm sure a lot of people will disagree with me on the AI stuff, but that's fine. That's just kind of what I believe for the AI. And that companies don't care about money, at least initial investment money. They would rather throw billions at this versus have to deal with employees for another week. But yeah, that was a pretty good video. Have a good day, everyone.